to settle on Apple Inc. for this video. Price Target Research tracks 6,000 North American traded companies on a regular basis, constantly looking for new stock market winners. Our initial selection criteria include adequate company size and liquidity, recent better than market stock price performance, and a high value trend rating. Income orientation and risk are also considered when appropriate. Additional criteria include favorable performance of other members of the company's industry group, recent company sales and earnings acceleration, favorable improvement in earnings estimates, adequate liquidity, and finally attractive longer-term market success. While Apple has been a premium stock market performer for decades, it still currently satisfies these criteria very well. Our appraisal of its stock price performance potential relative to the peer group and the overall stock market is based on the three key drivers of value: growth, profitability, and risk. PTR identifies Apple as having very high profitability, below average expected growth, below average financial strength, and instability. A big positive influence on Apple's valuation is its superior profitability. The key question we have to wrestle with in this video is whether the company's growth rate is adequate to support its current valuation and our current positive value trend rating. Welcome to Price Target Research. I'm John Lafferty. Everybody knows Apple. Apple designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. It also sells various related services. The company is traded on the NASDAQ Stock Exchange with the ticker AAPL. On October 20th, 2023, Apple closed trading at $172.88 with a current market cap of an almost unimaginable $2.7 trillion. What is the market's view of Apple's future operating performance as reflected in the current price of $173? Over the next 6 years, Apple shares will need to reach $290 to achieve annual average stock price performance of 9%. Upper quartile performance would require a $341 Apple stock price by 2028. The quartile chart is an essential tool in producing PTR's valuation scorecard. For each metric included, the performance of a company and its peer group is ranked high to low in quartiles identified. The high end of the bar is top quartile, the bottom end is lower quartile, and the line in the middle is median performance. The company's value is determined and converted to a percentile and plotted with a red dot. A company's investment profile is reflected in quartile charts. 4 categories, valuation, growth, profitability, and risk, encompass 12 investment variables. Apple's investment profile is very sharply outlined. A large number of the characteristics stand out: low dividend yield, high PE ratio, high price book ratio, high forecasted profitability, high historical profitability, high financial strength, high equity market value, and low earnings variability are all extremes. Relative to the S&P 500, Apple has significant growth characteristics. Its appeal is likely to be to investors heavily oriented toward capital gains. Apple is of the highest investment quality. Apple's peer group consists of 14 companies that have very similar investment and operating characteristics. The company has very high valuation, below stock market returns. Current valuation levels are very high relative to the peer group. Recent market returns have underperformed the peer group. Relative to the S&P 500, Apple's overall valuation is also quite high. Current annual total return performance of 24.6% is above median relative to the S&P 500. Current 5-year total return performance on an annualized basis of 26% is also upper quartile relative to the S&P 500. A company's intrinsic or sustainable growth rate reflects such physical things as units produced, customer counts, square feet, and head count. PTR's appraisal of growth starts from this perspective. Sustainable growth is reflected in the growth of balance sheet measures such as current assets, gross plant, and shareholder equity. As a consequence, our analysis of Apple's growth looks to the balance sheet as well as the income statement. The company's earnings growth has been superior. Equity growth and asset growth, on the other hand, have lagged. The company's historical income statement growth has been higher than the growth in the balance sheet. Revenue growth has exceeded asset growth, and earnings growth has exceeded equity growth, resulting in an improving return on equity. Apple's consensus growth rate forecast, the average Wall Street analyst, is 9.5%, about in line with the average of the historical growth measures. PTR's growth rate forecast of 9 is in line with the consensus and also in line roughly with the average of the historical growth measures. The company's future growth seems likely to lag its historical rates. Companies create wealth by investing capital at rates of return greater than the cost of capital. In general, the greater the difference between the rate of return and the cost of capital, the greater the wealth created and the higher a company's stock market valuation. Thus, return on capital and return on equity are extremely important in understanding a firm's performance on behalf of its shareholders. Apple's return on equity depends on the return on assets it achieves as affected by tax and leverage effects. In turn, its pre-tax return on assets is a function of asset turnover and pre-tax profit margin. Apple's return on equity has improved very significantly since 2013. The current level of 157.2% is almost 5.5 times the low for the period and is about 20% from the high level achieved last year. The key to the story for Apple is a strong positive trend in the pre-tax operating return it earns, significantly augmented by very strong positive trend in non-operating factors, largely its increasing use of leverage. The productivity of Apple's assets rose over the full period from 2013 to 2023. Asset turnover has enjoyed a very strong overall uptrend that sharply accelerated after the 2017 level. Additionally, the pre-tax margin has exhibited little to no overall change, but it experienced very sharp improvement from the 2020 level. Non-operating factors, income taxes, and financial leverage had a very significant positive influence on return on equity, as you can see from the chart. Profitability has been Apple's biggest valuation strength. Its pre-tax return on assets, asset turnover, and return on equity are group leading, as you can see. These factors have strengthened market perceptions of Apple. However, the company has very high excess cash and will have to work to reinvest that cash at attractive returns to support profitability and valuation. This is one of the reasons you've seen them buying back shares and redeeming the shares with debt to substitute debt capital for equity capital. Return on equity, our forecast is 183%, above our recent forecast. A dramatic, steady increase in forecast between 2014 and 2022 occurred, and the current forecast is, as you can see, significantly above the 2014 low of 31%. Apple's risk profile is unfavorable. Overall variability has been above average, with above average revenue variability, only average earnings variability, and quite high stock price volatility. The company's financial strength is only average relative to the peer group, and earnings expectations are also only average. The debt to capital ratio, as mentioned previously, has also risen during the last several years. Relative to the Apple peer group, Apple's wealth creation profile is very favorable. The profile is based on measures of warranted value, appreciation potential, and total shareholder returns. The rate of change in warranted value the company has achieved over the last several years is relatively very high. The company's appreciation score at the moment is only average, however, resulting in an average factor rating of 50. This means its possible appreciation from the current price looking out over the next several years is about in line with the average stock. As mentioned earlier, the one-year return is relatively low. The five-year return, however, is relatively very high. Total shareholder returns for Apple are expected to significantly lag the overall equity market. Based on current investor expectations, Apple shares should reach a level of $202 by 2028, a 3.3% per year total shareholder return. A 2028 stock price of $290 would reflect median performance, and a price of $341 would be required to reach upper quartile performance. PTR's value trend rating is the overall measure of a stock's attractiveness relative to a universe of all companies traded on North American exchanges. The value trend rating combines the appreciation score that measures a stock's appreciation potential relative to the universe, with 0 being the lowest and 100 the highest, and the power rating that measures its current timeliness, again with 0 being the lowest and 100 the highest. Stocks with high value trend ratings are expected to outperform the general market, while low value trend rating stocks underperform. Apple has a current value trend rating of B, which is positive. It gets there, however, with a neutral appreciation score of 53 and a quite good power rating of 83, resulting in the positive value trend rating. The key here is going to be whether this positive rating can be supported by improvements in expected growth for Apple, because at the moment the intrinsic growth rate of the company appears to be slowing and could well be a disappointment to investors. The value trend rating identifies groups of companies at stages when individual company performance is reflecting a significant change. As a consequence, a given value trend rating can persist for a relatively long period of time. It goes without saying, however, that ratings for stocks of interest should be reviewed regularly. Apple's rating history has been somewhat erratic. Over the last 41 months, the C rating category has been the largest rating category at about 44% of the observations. As mentioned before, the current rating is B, which is a positive rating. Well, that's it for this valuation scorecard for Apple Inc. You can find additional company research and current value trend ratings on our website at pricetargetresearch.com and more videos on youtube.com/pricetargetresearch.